Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 6th of June 2021. Today I'm going to discuss what I call the Cobra Kai investment strategy. I'm quite into the martial arts, close quarters combat, that kind of thing. And I know it's really cheesy, but I actually quite enjoy watching Cobra Kai. I find it quite entertaining. This is a TV series that continues on from the Karate Kid movies. In my experience, people that I've met who are experts in martial arts tend to be practical types who have great self-discipline and they exhibit confidence and persistence. But to me, they always seem to come across as being cool, calm and collected. If you think about it, these are the characteristics that come in quite handy in the markets as well. Investment strategies come in all shapes and sizes to fit different goals and different risk appetites. What I'm going to describe here is a strategy that I've put together that draws from the martial arts. Cobra Kai's slogan is "Strike first, strike hard, no mercy." And we're going to use this slogan to describe the investment strategy. Note that this strategy does not work on just any old stock. No, if you try that, it's going to land you in trouble. Okay, this really only applies to cyclical assets that have repeatedly exhibited parabolic moves. Parabolic moves are emotionally driven, and it's crucial not to get swept up by such emotions. You should be able to see multiple parabolas visible at multiple timescales in these assets. And this is a big one. Parabolic moves change lives, and they are worth fighting for. Here's a list of assets that exhibit the features that I've discussed. Does anyone know of any others? Next, we're going to discuss how to tackle parabolas. Strike first. By this, I mean get in early. This sounds really easy in theory, but how do we know if we're early in a parabolic move? Well, the first thing to look for is an intense dislike for the asset by most market participants. It should be something that's ignored or out of favour, and it must have negative or no coverage by the mainstream media. It should also be obviously undervalued, and that can be assessed by analysing things like the fundamentals and ratios in relation to other, pertinent assets and so on. Looking at charts can also be helpful. If you can catch it during this stealth phase over here, then you're doing very well. But even during the awareness phase, particularly over here in that early stage, is still okay. Now, although this is a theoretical chart showing how kind of parabolic moves play out and the emotions that are associated with them, it actually pretty well matches up with reality as well. So this is the chart of the NASDAQ index in the 1990s, and I think you have to agree it does look pretty much identical to the theoretical chart. The big thing to remember is that getting early means that you are early, and so as a result not very much is going to happen for quite a while. So if you have a look here, this is quite a shallow slope with a few ups and downs here, and this is where people come in with high expectations and then they get frustrated and throw in the towel. And by their very nature, parabolic moves do start off being gentle and quiet like this. And it does take time for it to play out. The big moves really do happen later on, but to capitalise on those big moves, getting in early is advantageous. So knowing that it does take time, you have to be very clear about the timescale that you're working with and set your expectations appropriately. The base of the parabola is characterised by relatively low volatility, and it usually looks like a rounded bowl. If you do manage to identify the bottom of that bowl, be aware that there's going to be a lot of weighting involved. That's normal. Here's an example of a parabolic move shown on the linear scale here and on the log scale here. So this is the bottom of the move here. And note that the price bars over here are pretty tiny, aren't they? They actually get larger the further up the trend and, well, further up the parabola that you get. So as the move progresses, these bars seem to get much larger. Sometimes on the log scale, you can actually get the slope from an early stage. So if you think of this as the bowl here, before the bowl is complete, that means reaching this high, you can actually here get the trend line early on, and the trend line actually broke here. Now, the problem is that this isn't always the case. Sometimes even on the log scale, these moves can be so strong that actually can even look curved, and so that's not particularly reliable, but it's a start. Looking for bowls on charts does not guarantee success with this. So just an example, if we look here at the gold price, in the mid 1980s over here, you can see we had a lovely bowl shape here. And if we were just using the chart alone and didn't see all of this in advance, it would be reasonable to think that, yeah, this might continue on to become the next parabolic move. But, in actual fact, that just fizzled out and price just basically flatlined for ages and ages here. So this is an example why you can't just use the charts alone. You do have to understand the economic environment as well as the factors that drive that particular asset. And you've got to take those into account as well to determine whether you think that this is going to turn into a parabolic move or not. Strike hard. This means that you've identified a potential parabolic move at an early stage, and once you've done that, most of your allocation to that asset should be invested during that stealth and early awareness phases. Now, don't misunderstand this. I don't mean that you should put all of your life savings, don't go all in at once. No, what this means is that once you've determined what proportion of your portfolio you're going to allocate to that particular asset, that allocation should be invested at the early stage. Now, there are a few reasons why I say this, and the first is an example that I've spoken about a few times in previous videos. So this chart shows the South Sea stock bubble, and that, as you can see from here, was a steep parabolic move. Isaac Newton invested quite early on over here, and his money doubled basically, and he took that whole investment out, and he was pretty happy with that. But the problem is that price continued to go up after he completely exited. And that's psychologically very tough to deal with, particularly when you're seeing, all your mates getting rich and you've kind of exited basically. And of course, because of this, the steepness, the speed of this move, getting in is tough. And so often the mentality is, oh, I'll wait for a dip, but the dip never comes. And then you reach the point where you just can't take it anymore and go back in. And what he did was actually go back in with a much larger investment than he had put in here. So people become overly confident, but you see, a lot of the move had already happened, and as price progresses, the asymmetry decreases, and it's asymmetry that we want to think about here. So the risks go up the higher you go up. So entering higher up is much, much more risky. So of course he did this and held on tightly, and of course price rolled over and he exited after the bubble had burst. So to summarize, with these parabolic moves, you want to avoid adding to your position when the parabola is in full swing. The vast majority of your investment should be down here in the earlier stages where the asymmetry is much, much better. Now, some might ask about dollar cost averaging on the way up. And this does have its advantages. It is a systematic and disciplined way of doing it. And it does avoid making emotional decisions. It doesn't require market timing, and it does avoid unlucky timing. However, the disadvantages are if you have the cash available but hold on to it, waiting for your dollar cost averaging time points, then this does come with opportunity costs, particularly remembering that cash tends to lose purchasing power over time. The other thing is that if you are in a bull market, then it's been shown that dollar cost averaging strategies tend to underperform lump sum investing. So, of course, in a bear market, the reverse is true. So I would say if you were to dollar cost average, that's okay, but do it early on in that stealth and awareness phase. Try and avoid putting more in further up the parabola. No mercy. By this, I mean trying to stay the course and avoid selling too early. That means being able to hold on tight, so-called diamond hands. To do so requires an understanding of the volatility of the asset that you're dealing with. That's absolutely crucial. And the selling would ideally occur during the euphoric phase and preferably in a staged manner rather than in a lump sum. Here is the previous parabolic move in gold. And so here we have that original bowl, and then it moved up like this. And ideally, most of the purchases would have been made down here. So that's kind of on that right side of the bowl there. And at that point, the fundamentals would have been aligned with that technical picture as well. Now, holding on through these two declines here would have been tough. But of course, if you understood the volatility for gold anyway, you'd understand that 30% declines are actually quite normal in a bull market. Now, obviously this here is quite a steep rise, and you don't know where the end of this trend is going to be. And so selling at least your initial investment around here would actually be quite reasonable. Selling the whole lot might be a little bit more tricky unless you kind of were expecting this drop and wanted to get back in at this point. That's not easy to do though. But keeping some of your position is handy until you know for sure, whether or not the trend is going to continue. During this final leg up here, buying is actually best minimized or avoided, unless of course you're getting in right at the bottom of this correction here. But further up, your thoughts should really be turning towards stage selling rather than adding more to your position. As price rises up here, you should be getting increasingly nervous rather than the euphoria that most people will be feeling. Look, I know that this all makes it sound very, very easy, but in practice it is a lot harder than it sounds, and it's by no means a flawless strategy, okay? But it can work. And it's a strategy, in order to work, it requires patience and discipline. The other thing to remember is that it takes time to play out. So it does require patience. Just like the martial arts, it's not suitable for whingers and whiners. However, if you can get it right, it can be potentially life-changing. So remember, strike first, strike hard, no mercy. Yes, Sensei. Next up, the market update. Let's start with gold priced in US dollars on the daily scale. And we had a bit of a shocker over here, quite a large red candle there. But look, you've got to put this all in context. This is still within a healthy uptrend. So things like this shouldn't freak you out too much, depending on what timescale you're working on. Of course, if you're one of those day traders, then yeah, that would have been a big problem. But yeah, on this bigger time scale, that's just pretty normal actually. And you'll see that we had discussed about this downsloping trend line that's been going on for months and months since last year. And often when you break out from that, you get a retest of that downtrend. So when we had this red candle, I did wonder whether we'd actually go all the way down here to about 1830, 1840-ish. But actually, we've got a very strong bounce back up before we even reach this trend line. So I'm not sure that we're actually going to go all the way back down to here. It's a possibility, so just bear that in mind. But I think that's probably the lowest we'll go. This is still looking promising, though, with this nice bounce up here. So I'm actually expecting a resumption of the uptrend. And note that we're kind of in this channel as well over here like this. So probably I'm thinking we're going to stay within this channel. Sometimes it might get a bit boring and go sideways for a little bit before making its next up leg. Let's see. Just looking at the minors though, I'm suspecting actually it'll probably move up towards that 1950 first before getting knocked back further. I think that is one big zone to watch out for there. Let's move on to silver, priced in US dollars on the daily scale. And this uptrend we did have a break of. I guess it was kind of long overdue. We've had multiple touches of it. And yeah, that was a big candle, a bit of a shocker for most. But again, we had quite a strong bounce back up again. And I don't think we're going to go below 27 still. I'm still hopeful here and feeling pretty positive here. What we're looking for is a move up into this next zone here. And I don't think we're going to go straight through that zone and move up and up and up like that. No, as I've said before, when we move up into this zone, I think we are going to get knockbacks again. So, you know, these things are never straightforward here. But yeah, for now, I think we're either going to get some sideways movements or further moves upwards, possibly back up into this zone at some point. But yeah, this is just going to take patience. But we are still in an uptrend, higher highs, higher lows. So I'm not worried at this stage. Looking at the gold miners, this is the GDX on the daily scale. And you remember last week, I had posed the possibility of a break downwards, but I didn't think that was likely. I was thinking more because we had this kind of triangle shape that we would break upwards, but that didn't happen. But, you know, at least we were open to that possibility. And I thought the maximum kind of downside would be to this trend line. Actually, thinking about it now, that is still possible, because if you think about it, we've got this triangle, so the target will be the height of this triangle, which kind of matches with the height of this. So I guess we shouldn't get too comfortable, because remember, this is quite a big gap here. So it was an exuberant breakout downwards. This is a retest of the underside of that triangle. And so actually, yeah, thinking about it, a downwards move is possible before we move upwards from there. So yeah, just bear that in mind. I mean, the other possibility is that actually this could be a flag like this, in which case, and also this gap will want to be closed. So, and the other possibility, of course, is moving up here to fill this gap, and then maybe a little bit down and then move upwards. Yeah, that's a tricky one. And you know, look, there's going to be people who say, oh, so it could go up or it could go down. Yes, but what we're looking for is the limits of that. And, you know, for me, the downside limit is this trend line over here. I don't think we're going to break below that. And, you know, even if we do go lower from here, that would match with this pattern here. So, you know, and the upside is huge in comparison. So, you know, it's all about thinking probabilities, not certainties. People who say, oh, it could go up or it could go down, that's not very helpful. You know, they just don't understand what the market is and how it works. Okay, silver miners. Oh, we're still within this area here. It did actually try and break up last week, and it actually got to 18. And you know, so this is the trend line that we're working with, and we need a kind of green candle that goes above this and stays above this, and we haven't had that yet. We had a kind of attempt over here and a couple of attempts over here. I think it is going to happen. I think that's highly likely. Again, we just got to wait a little bit longer. And again, we had that exuberant gap down, but a very nice bounce back up again. So yeah, it's just going to be a waiting game. But I think that is going to break. I think when it does break decisively, then we really are going to be moving with the silver miners. Okay, so I thought I'd end with this. Now, the other day, I just had it in my head that I fancied some Pringles. I haven't had Pringles for quite a few years now. I think it must be about 3 or 4 years since I last had them. So I saw them on the shelf and I bought them. And I thought, this is a bit strange. So this is what the packet looks like. Okay. And to me, I thought Pringles had a wider diameter than that, but then I thought, oh, maybe I'm just imagining it. And it did say new look, same crunch. So maybe it was taller and thinner. I don't know. So yeah, as I said, they're advertising quite strongly how it's a new look, but the crunch is the same. So what's new about this look? I mean, the you know, all this logo and stuff looks pretty similar from memory. So what's new about it? And it says it's 134 grams. That seems like a kind of odd kind of number. And I can't remember how many grams it used to be, but none of this kind of felt right to me. There's something different about this. But then they have said that there is something different about this. But yeah, does anyone remember how many grams it was and what the diameter of these packets were before? I can't remember. Anyway, I opened the packet and everything became clear. And this is what it looked like. Now, this is before I hadn't even eaten it. I hadn't even eaten it. I just opened the packet and this is a photo of what it looked like. So the first thing to note is that it doesn't even go to the top. The crisps kind of end over here. And the diameter of the crisps are kind of almost half the diameter of the packet. They're just rattling around in there. And when I picked up the crisps and ate them, they felt smaller. I don't know. I think these are definitely shrunk, and that's the new look. Pringles have shrunk. The price was about the same, if not more. And yeah, an example of shrinkflation. I'm pretty sure that's what's going on. If anyone's an expert on Pringles, let me know if that's changed. I presume that's going to be a worldwide thing as well. I don't think it's just New Zealand. But yeah, I'm noticing things like that more and more. And they doll it up by saying new look. Anyway, that's shrinkflation in action. Anyone got any other examples of that? I'm sure there's tons. Well, that's it from me for this week. Don't forget to like and subscribe, and we'll see you next week. Bye.